Welcome to another day in the Matrix, waters above crypto. I'm sending you all love and high vibrations. Hope you're all doing incredible. In today's video, I'm going to focus on the charts and share my sentiment of what's going on in the crypto market in the short term and compare data from previous cycles to shed some light onto what's happening during this exact time of the bull run in previous cycles. And not only the Bitcoin chart, but I'll also be sharing another special chart with you to add some more weight onto how the month of December will play out and how we'll be moving into the new year for the markets. And since a lot of people have been reaching out to me about my courses, I've decided to extend the Black Friday sale I was running for an additional 24 hours. So I'll be sharing more information on that sale in a moment. So if you're new here, we do cryptocurrency technical analysis and combine it with Gematria Numerology and Astrology to understand these markets. Feel free to subscribe and turn on the bell notification to stay updated on when new videos come out. And make sure to give this video a like and share this channel with other conscious beings to help grow this community. And as you heard earlier, I'm currently running a sale for both of my courses until the end of the month. So for those of you that want to learn how to do technical analysis and combine it with Gematria, you can join my mastermind course by using the link in the description box of this video and in the pinned comment below, watersabovecrypto.com/Black Friday. And that already has the discount automatically added to the price, so there's no need to add any promo codes. All you'll need is the link and you'll be able to get access to both of my courses, the mastermind course and my new advanced trading course with a discount. And with that being said, let's take the red pill. So we're going to move straight into the charts today because that is what's most important. We have to recap what's gone on over the past 48 hours or so, and that was essentially just the shakeout. So we had this dip back last year that came down pretty harsh on the 26th of November, and you can see that a price movement to the downside was 8.33% down. So if I'll hover right here, all you got to do is look up right here on the screen and you'll be able to see that we were down on that exact day of November 26th by 8%. Now this year on November 26th, we were down also 8% on the same exact day. And then this led to a V-shaped recovery. And so far, if you look at this structure and you look at what we're seeing right now, it is essentially a V-shaped recovery. So these days that we had all around here were quite important because we had 330 days left in the year. In the rules of numerology, that would be 33. Then we had 33 days left in the year on the 28th. And then we had yesterday being the 333rd day of the year. All of these days being quite important. And I would also assume that was why we got that V-shape action last year as well. The big difference this time, though, is that we are actually in a noticeable bull run because back here we were just starting to break the prior all-time highs from 2017. So when I zoom out into the structure and I hold my cursor at the prior highs of 2017, you can see that we were essentially rejected right below the prior all-time high, came down for a little correction, and then kept it moving after that into the month of December. So pretty much what today's video is going to discuss is why December is bullish typically, and also why the month of November we can expect shakeouts, just like in the month of September we expected a shakeout and it turned out to be that way. I think the difference on this recent shakeout was how random it was on one day of the week and how it did essentially bring down alts quite significantly, and it was to alter sentiment. And now we can see that it did a very good job at that because we're essentially back to trading where we were before the shakeout happened. So I was warning pretty much all the way back from maybe I would say August that it's quite normal during the end of a bull run cycle before we have a parabolic advance, essentially before we have what's called a blow off top, to expect random shakeouts that get bought back up pretty much within days. And this is exactly how we've been seeing it happen time and time again. And the 26th shakeout was no different. So again, we had the shakeout of November 26th, exactly 8% down. The one that we got this year on November 26th, 8% down. And then another thing to consider that I brought up is how in the past two bull runs for Bitcoin, the bull run of 2017 and the bull run of 2013, there was a correction of 30% or more in both months of November. So right over here, I just have the chart from November 2017, and you can see from the peak high down to the low, we were down 30%. Okay. And this was a very quick V-shape recovery, essentially what we're seeing right now. Okay, I'll go to the 2013 one real quick. I know I've done this before, but I just want to show you how much more violent it was in 2013. Okay, so this was November 20th, and this was the shakeout. It was about 50% down in 48 hours, followed by a V-shaped recovery. Quick. Okay, so I'm going to keep this on the 2017 chart because that's what matters most. And the reason why is because essentially up until around the start of November, our current chart was basically mimicking the 2013 cycle, where we had highs in April followed by a larger correction through the month of May, bottomed out in June and July, followed by a recovery into Rosh Hashanah. Then we had a final bigger correction moving into new all-time highs. Okay, and then after you break all-time high, it's quite normal for you to backtest prior resistance, which is essentially what we're doing now. And although we dug a little deeper, it's not actually that off, because essentially the levels we were coming back to were the highs of Rosh Hashanah. That's very normal to break out and then backtest a prior resistance. So again, the shakeout that we had from top to bottom before my last video was 20%. And then after that video, we moved down an additional 2%. And it completely changed the entire sentiment of the market. The market went from going pretty much greedy to extreme fear over a 24-hour period just because of an additional 2% move down in Bitcoin. This is how incredible this market is. And look at where we're back to. We're right back to where we were when we had greed in the market in regards to price action. Another thing I could show you is volume and just how manipulated this was through volume. So I'm going to turn on volume and I'm going to show you. When we dumped down, look at the amount of sell volume that was necessary to facilitate the dump comparatively to the amount of buy volume that was necessary to move us back up to the same exact prices. Okay, so this is something that's very telling. And then this is just the 4-hour candles. If I go to the 12-hour and I start to zoom out, you'll see what's going on here through the volume signature. So volume is showing that we are actually having essentially a declining volume. And look at how low the volume candles are when I zoom out. So we have declination of volume going on with price increasing. This is bullish, okay? Because when we study the way bull runs end, which I'm going to show you in a moment, you'll actually see an increase in volume. So this is the way that the 2017 bull run ended. You see there's a gradual increase in volume leading to a blow off top, and around the blow off top you have huge candles. Okay, so there's something interesting about what's going on here with us essentially having a declining volume structure with an increase of price. This means that it's taking less effort to push Bitcoin up, which is part of its scarcity model. And now you could see in the middle of this video, we're back at 59,000. We're essentially going to start breaking potentially the prior highs before we had the dump. So this is just a shakeout. Again, this is normal. This is that stage of the bull run where shakeouts are quite normal, and we can see recoveries from shakeouts within a day. We could see new highs within 4 to 5 days. This is how this market works. Again, I'm not saying this will happen. I'm just saying to be open-minded to all of this stuff, because when these moments were happening, it was essentially opportunity and people were getting scared. You never want to do what the masses are doing. When you're starting to see extreme fear enter the market through especially like just mainstream media, because that's what influences most people, that's when you want to start getting bullish. So anyways, that's of course not advice, but I do want to consider everything that's going on here. So far, we've had a 23% correction to the downside. We've back-tested the prior highs of Rosh Hashanah. We've bounced pretty nicely. And now, essentially, until we make all-time highs, we're not out of the woods just yet. The reason I'm saying that is because after you make a new all-time high, you want to look out for something called a dead cat bounce. This is a bull trap that gets rejected around the golden pocket, which we could essentially just call these layers right here, somewhere around 64, 65K. And then followed by a breakdown, which makes a new low. So I'm not saying this will happen, but if we had, let's just say, Bitcoin pump up to like 64, 65,000, then get rejected and not make a new all-time high, followed by a return back to the lows here of November 28th, and then making a newer low, that is most likely the end of a bull run. So I'm letting you know that off the bat. As a technical analyst, I want to start focusing more on the TA, because a lot of people have been getting really off the rails in regards to these exact price targets on exact days, and they're disregarding the way that this market actually operates. Okay, the market will do three things. It will go up, it will go down, or it will go sideways. All we're doing here as analysts is trying to figure out the probability of which direction it will go. Okay. And then on top of that, utilizing Gematria Numerology Astrology, it allows you to have an edge on the market. But the precision here is near impossible at the end of the day. And one of the things that I think will help us best is just being calm and composed and allowing the market to do what it does. And what the market does best is manipulates people's emotions. Okay? The market never gives you what you want. It just does. And it's best to just exist in that and do your best as an investor. To carefully invest whenever you see opportunity and essentially keep your emotions in control whenever you're about to make a decision in the market. Some words of wisdom. So, a couple things I want to discuss now is what theoretically could we use to determine new highs. Now, one thing we could look at is this fractal right here, which we seem to be playing out to the day with the V-shaped recovery in effect as we speak. And I'm going to measure from the 26th over to the highs of right here on the 8th. And you can see that gives us about 43 days. Now, I'm going to go to the 2017 cycle, and I want to take from the lows that we got on November 12th up to right here on the 17th, and that's 35 days. So what I'm going to do just for fun, everyone, is I'm going to take from the lows that we got, which were on officially the 28th, the start of Hanukkah, and I'm going to measure over 35 days, and I'm going to show you where that brings us. So around 35 days from those lows is December 15th, okay? So something to keep in mind. Oh, I'm sorry. I apologize. I am on the 12-hour candles. So from 35 days out, we are looking at the very early January 2nd time frame. Now, January 2nd is interesting because that is actually the new moon of January. Just a side note. And we all know that new moons are bullish. So again, one of the other things that kept me calm during the last basically 4 to 5 days was the fact that we got our lows in after the full moon, which was an eclipse, by the way, so it's always more powerful. And then now we're moving into a new moon. So there will be recovery. We just have to watch out for how that recovery looks. And I just gave you the technicals on that prior with the dead cat bounce scenario. Anyways, so from 35 days out from the 28th, we are looking at very early January, which was essentially what we were considering for an alt season, sometime in January, because that's what we had in the last cycle. Now, are we going to be pushed out an additional month? Perhaps. We have to be open-minded to that. That would be great, actually. I was saying this in my Red Pill episode over the weekend, how happy I would be to see Bitcoin actually move into the month of January with new highs, because that allows us to defer taxes to an additional calendar year. Again, words of wisdom. So this 35 days out is compelling because we've seen it happen in the cycle back here in November, where we had our shakeout around all-time highs, followed by a basically a straight line breakout into January. Then we had what I just showed you with the 2017 cycle, where we came down into a correction of November, and then it took us about 35 days. So the other one would be 40 days or so. Excuse me, I'm taking off the lows here, and you can see 44 days till the top, 44 to 45 days. So from where we are now, over 45 days would be January 11th. Okay, that's actually a pretty special date because it's the 111 date in the year of 222, numerology, 2022. So that would also be compelling. Another thing is we've seen in the past Bitcoin extend up to 10 days past a new moon and hitting a high. And the time we saw that was back in February. So I'm just going to pull up the moon cycle indicator really quickly, and I'm going to show you what I'm talking about. So you can see right here on February 11th was the new moon. And then if we drag over to the day of the top, that was actually 10 days later. And if we were to take from the new moon of January, which is on the second day of the year, over 10 days, that's going to give you the 12th. So it's possible that we actually do see a Bitcoin all-time high on the 11th, and that would be within the fractals. Again, I'm kind of like done at this point talking about exact days. I'm just providing data to help everyone see what's possible. So this is compelling that we have so much going on in the month of December. We have Saturnalia. I know in January we have the Wolf full moon on the 17th again, so anything before the 17th is compelling in regards to highs. We've seen in past cycles Bitcoin, we've seen other charts like the tech stocks, and we've also seen the altcoins top out around this December into January timeframe. So we're still on track. That's pretty much what is most important here. And it was interesting because when we started to have this correction the other day, people were calling for bear market and saying it's the end and all this stuff, and also saying we're in a downtrend, but we're not. Like, actually, if you zoom out, you can see very clearly that you have your low, you have your higher low, and now we have another higher low. So this is very bullish, especially after breaking a new all-time high. I think it's just a good time to be calm. That's pretty much what I'm trying to say. So it's a good time to be calm. Just relax. Let this all play out. It is just another shakeout in the matrix. So one last thing I want to show you. I mentioned a special chart, and it's the Amazon chart going back to 2007, 2008 when we had the housing market crisis. Now, what this highlighted area was the Shemitah of 2007. So you can see from right here around September to September the following year, this was Shemitah. And that's very important because right now, since September, right here on this exact day where we had that big red candle, it was also 11% down. Again, another master number. But anywho, we would be drawing our red box from here over to September the following year. But anyways, what we're seeing is that we do get a little correction right there in September 7th. Look at that, little correction, and then go up to new highs. And these highs come in around basically early October, get a little correction, and then we get highs on the 23rd of October. That's really interesting because Bitcoin literally hit its highs and broke out to a new all-time high on the 21st. So that's another really interesting thing that I just found, is that we did top out. Again, we had a little consolidation and made new highs, and that's very normal. This was, if you look at it on candles, it looks like a complete manipulation candle. You see this? It's just floating. It even has a gap. So this day of the 23rd of 2007 was very ritual for Amazon. It even went, oh my God, I didn't even know that till just now. If you pay attention to this part of the screen, you're going to see it was up 10.44%, like 144 in numerology. That's fucking crazy. Anyways, so then we do get a correction into the month of November, and this is what I want to show you. Let's disregard this floater and go from the highs in the structure down to the lows. And you're going to see we were down 20%. The correction from the October highs down to the November lows, 20%. What did we just see for Bitcoin? A correction from highs to lows of 22%. It's almost identical if you're starting to look at the structure in the months of October, November, and perhaps moving forward. Then you can see we have a new moon into December where off the lows, we do have lows into mid-late November, followed by a recovery into the new moon of December. Now, of course, these lunar cycles are slightly different every year, but this is extremely interesting. And then we do get a little bit of a back test in December 18th. Again, this is around Saturnalia. And then look at the peak, January 3rd, right around the January new moon. And this is during Shemitah, just like we are now. So you can see this is pretty compelling stuff. This is really interesting to me. All roads sort of lead to Bitcoin and crypto and the rest of the market doing pretty damn good through the entire month of December into very early January. And look at what happens after January, though. Dump into March. And this is what I've been warning about for a while. So if we get a quote-unquote extended cycle, I don't think it's going to be much further than February. And if it does continue past February, then okay, we have for the first time something quite different, and now we have to just go with the flow from there. But I think it's pretty interesting when we look back at this Amazon chart from 2007. Again, this was a very similar economic environment in regards to how much chaos was going on with housing. So we can see the lending standards are tightening up. There's a lot going on right now with housing, and this is again something else that I'm really considerate of for the grand scheme of things, you know, for the big picture. But anyways, I don't want to make this video too long. I just wanted to share this Amazon chart during the Shemitah of 2007, 2008, and show you that this structure is looking pretty incredible. And even Amazon would follow the lunar cycles for the most part as well in the past. So lots to say there. Again, open-minded to how December's going to shake out. We do have a monthly close coming in tonight, so I do want to just give everyone the technical analysis on Bitcoin, ETH, and XRP before we wrap this video up. So for the most part, what we just saw was a textbook shakeout. Now, what we want to see, and this is based off my experience as a technical analyst, we want to see a recovery of the 21 exponential moving average on the daily chart. And right now you can see we're pretty much banging up into that. We're trading slightly above it though, which is a good sign. So a couple things to note, everyone, when it comes to a recovery. One, we want to see a daily close above the 21 exponential moving average, which is this orange moving average, okay? It would be even better to just get it above all the key exponential moving averages. So that would be a daily close tonight above 59,200, but ideally I would like to see a high a little bit above the structure of November 21, which puts us essentially at 60,000. So that is not me wishful thinking, that's just me telling you what would look best, all right? Daily close above 60, which will be above all the key exponential moving averages. Second thing we want to see is this MACD bullish cross. So we can see that the histogram, it's flipping, it's getting real close. We don't want to fake out like we got back here, but the reason why this fake out doesn't actually matter much is because we were in the positive territory. What we're seeing now is MACD in negative territory, which typically when it gets into that territory followed by, RSI readings below 40, that's typically a buy signal. Look at that. Every single time we're in red MACD territory with RSI below 40, typically a beautiful time to accumulate Bitcoin or open Bitcoin longs, etc. Or just buy altcoins, because when Bitcoin does shit like this, it brings the alts down. So however you want to look at it, right? So now what we've seen is RSI did get below 40 on this day. It started to create a short-term bullish divergence. And then on top of all things, we're potentially going to be recovering over this 21 exponential in maybe even tonight's daily close, and then a MACD bullish cross is imminent, maybe within the next the next day or so. So all things considered, this was a beautiful structure that we've actually seen in the past, going back to last year, V-shape. And now what we need to see is, will we do something similar to November of 2020, where we had this arduous sideways 15-day thing? That's the other kind of thing we have to ask ourselves. And remember what I was showing you, how in the 2017 cycle, it took us like 35 days. It's because it didn't have this sideways move after being the V shape. So we have this V shape followed by essentially immediately moving up in green candles in a straight line. This one's extended slightly because it went sideways. Now, we have to be open-minded. Whatever happens, happens. But I believe that we're most likely going to be mimicking the 2017 one slightly, maybe even a little longer, moving into the new moon of January or something similar to that. So again, I'm open-minded to whatever at this point, because it doesn't really matter. It's going up. And one of the things that we could also consider is the 6-hour analysis that I wanted to show everyone. And this is looking amazing. So let's turn off all these exponential moving averages, and we're going to look for our wolf cross, and we got it. So the wolf cross is when the 8 gets above the 55. I don't like this cross that much on the 4-hour chart as much as I like it on the 6-hour. I've seen fake outs on the 4-hour, but on the 6-hour it's compelling. So again, what would make me very happy to see is a 6-hour close above the 200 simple moving average, and then I would like to see this 8 simple moving average getting above the 200 exponential moving average. If we can start to see that, I suspect we're on our way towards recovery. And then again, MACD bullish cross on the daily plus RSI getting above 50 on the daily seals the deal. I think this thing will start moving back into prior all-time highs very, very quickly, maybe by December 2nd. Okay, so just giving you a time frame, because that's typically how we see Bitcoin behave. It's a very quick recovery after a dramatic flash to the downside. So there's the 6-hour analysis. We're looking good with the wolf cross. We're potentially going to be closing the next 6-hour candle above the 200 exponential moving average. This will also slope down the 200 simple slightly, and this is a cough away. We're talking about an additional 2.8%. So let's look at our monthly close, because that's coming in tonight. And we can see that this is looking fine. There's really not much to say here. You see the prior closing highs were sitting around 58,800. So as long as Bitcoin's closing above that, we essentially just broke out into price discovery and back tested the prior resistance level, monthly resistance. Okay. So again, it would be great to see a bullish engulfing candle, something above the levels of 61,400. So 61,500, that would be ideal, just because we would have a bullish engulfing on the macro. You can't really say anything bad about that at that point. But, that would be an additional move for Bitcoin of about 4% between now and the daily close, which it's 100% possible. Okay, it's 100% possible because it's 10:30 a.m. right now, and the close isn't until 7 p.m. Eastern Standard Time, and Bitcoin's already starting to charge. I suspect that also has something to do with the DXY today, probably being under pressure. Oh yeah. So DXY is down 0.6%. It's very volatile. It's essentially looking like a blow-off. The DXY charging to the upside like this and then having this correction, it's looking it's very manipulated at this time. So again, beautiful to see it bring some pressure to cryptos in the final moments to give us some good buying opportunities. So yeah, that's pretty much it. On the daily, it would be great to eventually also close above this 55 simple moving average, which would eventually give us the wolf cross on the daily. That would be very, very strong. And then I suspect we would have 2-day MACD bullish cross as well. So let's move on to Ethereum. Oh my goodness. ETH is just really doing amazing lately. It's hard to complain. So I gave a bunch of shout outs for ETH yesterday in the Discord on my Trading Wolves Patreon for those traders in our community. And this analysis that I gave is playing out beautifully. So we did see some sort of downsloping resistance line. We've clearly broken that. I don't know if we'll get a back test of it. That would be a Twin Towers candle, and that would not be nice to see at this stage. But I think this is all good to go at this point. We're within price discovery by like $100. We're seeing histogram flip bullish on MACD on the daily chart. We're seeing RSI get above basically into the 60 level. There's really nothing negative at this time. This is looking gorgeous. Okay, so remember what I just said about Bitcoin that I would like to see? It's already happened with ETH on the 6-hour chart. So you can see this 8, the yellow moving average, crossed above both 200s and the 55. That's very strong. So I suspect the exponential moving averages are all, yep. So this is in perfect bullish posture on the 6-hour chart. You could see the 8 is above the 13, 21, 34, 55, etc. So this is incredible. Now, if we start to see this on the 12-hour, that would be really nice. And you can see we're not quite there yet. The 8 needs to eventually cross above this white moving average, the 55, and that would solidify, if it was to backtest this downsloping resistance, then it would just be a textbook area to have a bounce. You like to see backtests of prior resistance. Straight line breakouts are unhealthy, and they're not something a real analyst seeks. But we're in crypto, and crypto can do whatever the hell it wants. If it wants to move in a straight line, it will. So in the meantime, downside levels would be clear. The prior highs over here in the structure of November 26th, or if we wanted to dig a little deeper, wicks into this downsloping resistance line, that would be very normal for a bounce off of there. And then I suspect price discovery could either be within the next 24 hours, or we just have to see how this back test goes. If the DXY continues to drain to the downside and the stock market remains healthy, of course, we're going to see crypto continue back to where it should have been before the eclipse. So upside targets are really just price discovery into the 1618, and I suspect that could be in the cards by December 4th, somewhere into the 5,000 region, 5,000 to 5,500. By early December is absolutely in the cards for ETH. And then the downside, I just think it'll hold structure somewhere around 4,400. Let's go to XRP, which again, XRP is pretty much right back to where it was. I love when I see things like this, by the way, if I show you without any moving averages. So this was that falling wedge, and the falling wedge clearly broke down. Definitely shook out a lot of longs. It stayed above 86 cents, which I thought was incredible, and then boom, right back up, and now it's breaking somewhat out of the descending resistance. So we could draw some more trend. Yeah, I mean, this thing's pretty much breaking out. So I would love to see MACD bullish cross on the daily, but for XRP, I really like it to be on the 2-day. The 2-day has always been a strong signal for going long. And one other thing, getting daily closes back above like 103, 104 would be strong, because then this right here won't be a new resistance. That's always bad when you see us break below the lows in the prior in the microstructure, and then we start to have issues coming up against the lows. We saw that happening yesterday, and that was a little bit pressing, but then we just broke right through it today. So it's good that we're holding structure still. we're still making higher lows, even though it was within a couple of cents. So, XRP taught a lot of people lessons over the weekend. Those leverage traders out there that are fucking around with this coin, you probably learned a lot. And anyone who's in 3x longs or less, you're probably just kicking back, chilling, adding to your positions. So again, not to make a joke out of anything, but it's just true. These weekend shakeouts that happen, they're retail panic selling. And it's funny because some people will get mad and they'll blame the elites or whatever, but it wasn't the elites causing the dump. It was panic selling from retail and high leverage traders getting themselves into something that they shouldn't have even been getting themselves into to begin with. So lots to say here. I want to let this next day play out because today was a very volatile day in the market. It's obvious. We see that the DXY is doing what it does best, which is basically just shaking people out moving into Q4 or in Q4, excuse me. And the stock market is just kind of building strength. We're seeing Bitcoin and these other altcoins recover. It's pretty much all good in the hood. I wish I had a lot of more things to say in regards to negative sentiment, but I just think backtesting the prior highs in the structure is a very strong thing to happen, and it was a necessary thing to happen. It's been a thing that I've been calling out for a while, and the fact that we got it a little late in the structure is completely fine. We're going to be back on track eventually. I would say that in the short term, Bitcoin is not looking as good as ETH, but ETH doing really well signals that Bitcoin will catch up. They both move in tandem. So it's beautiful to see either one performing better than the other because it just helps us have a bullish sentiment when most people were getting bearish. So again, I'm running that end of the month sale on my courses for the next 24 hours. For those of you that wanted to get my mastermind course or my advanced trading course, that will be at watersabovecrypto.com/Black Friday. And the new month of Patreon actually goes live tomorrow. For those of you that have been waiting to join Patreon, I might make a new video tomorrow depending on how our monthly close goes. So we'll just have to wait and see. I know I didn't make a video yesterday. It was because there was no need to. The market was very boring and sideways. Now we're starting to see a little bit more structure. So we'll see how tomorrow goes. If we get a good close in the market, I'll probably be making a second update video earlier in the week. Enjoy the rest of your day in the Matrix. Much love.